Welcome, got the lesson of the day here from The Real Deal, and this one is a big one. I think personality tests are kind of a bit of a joke. It's not really my thing. I'm not going to pretend to be a psychologist, but if you're going to be a trader, you do want to at least understand what type of trader you are, and not just in the sense of your temperament, but the styles of trades that work for you. Because if you can understand that, then you're going to better be able to fit yourself not just into trading the right stocks, but trading the right setups and having the right risk plan. Because if you have a risk plan that goes against your personality, you're going to find yourself getting into a lot of trouble. So I'm not just going to talk about what the different types are. It's about how to spot them. It's about how to take advantage of them, and also how to limit your losses by understanding the type of trader you're going to be. So in the very first sense, every single person that wants to trade to some degree likes taking risk. Okay, so when I use the term risk averse or more conservative, it's all relative, because if you are a trader, you're already a risk taker. That's just it. So anyone that tells me, oh, this trader's not a risk taker, you're talking about on a scale. So if you're looking at that 95% of the population that isn't wanting to trade or take risk, if you're in that 5%, I'm just talking about the top end of that. Those are the risk taker types in trading. And if you are conservative or if you're a risk taker, you're going to want to understand which one you are. I know for myself, when I found out that I was a little bit more of a conservative trader. What does that mean? So the way to look for how that manifests is when you start your trading, what types of problems do you have? Are you the trader that finds themselves, oh man, I got stopped out there too early and look at it run. Oh shoot, I made money on that trade, but I took too much out too early. Or are you the type of trader that's like, oh crap, I just lost my entire week on a single trade. Oh wow, look at this winner, I held it all day long, I got the top and the bottom. Well, the latter trader is the one that is shooting that moon. That is your risk taker. If you're the person that's, I have a tight stop, I'm getting top wicks, bottom wicks, I'm getting jiggled out of trades, then you're somebody who is looking toward that exit a little bit more diligently. So if you can understand that, you can try to tailor your style around it. So what does that mean in practice? I'm going to show you some examples from today. Because NVIDIA has been absolutely flying around. What better place to go than the most active stock volume-wise today on NVIDIA? There were lots of ways you could have played long in NVIDIA. If you are a risk taker, then I promise you, you would have been looking long in that first couple of minutes in the melee and the madness. Why? Because that's where your biggest return was. So when we come to the chart here for a second, it's all about ridiculous gap up to the upside. Let's just clear the tape here. Like, it was a clear, obscene gap to the upside on earnings. You were holding higher despite it was like a $20 pullback at one point in the pre-market, and then at the open, you were testing the 740s, the 750s. If you like the long and were looking for it, there was a hammer candle breakdown right in here, and then a wicked bounce. Now, a trader who is aggressive, who knows that they're looking to get that big, massive move, they're looking for an entry to maybe risk 10 bucks on the trade and try to make 20 or 30. To them, it's going to be worth it to try to capture a move in here where a 750 break might not be wrong into the bottom. And then you're giving up $8 or $9 on that trade, but you're not sitting there, oh, I'm taking a bunch out in here, 55, 56, 57. Because if you're going to take a 750 break and get a bunch out here in 54, 55, 56, you can't hold it to 740, because then you're taking the bulk out for $5 or $6, but then you're going to lose $10 when you're wrong. So in that sense, you cannot be losing more than you win. But that trader that never has trouble holding, they always think something is going to the moon, they can take that aggressive stance of grabbing the longs on the way up, even if they're chasing that initial move a bit, because there's the explosive upside. Now myself, I know I'm a little more conservative. I'm looking for an entry where I can limit the risk and have a greater risk to reward. So I was waiting for a key price level to hold above that 765 level. I'm like, this is the resistance for the bulk of the pre-market. Once there's buyers above, I'm taking my shot within my style. 765 into the pre-market high. I know the trade I'm going for. I can get the explosive move. And the thing about trading is it doesn't matter how good your idea is. if you're not going to actually execute and then hold the trade to your plan. So if I took a 750 break instead of a 765 break, if it wicks down to 745, I'm not actually holding that trade. So when it goes to 780 after, it's completely irrelevant to me. Because it could have been right, but I'll never win on that because I'm never going to hold it that far. It's just not my style. But the 765 break with a tight stop, I can do that multiple times. Risk under $1, multiple times there to grab that $3 to $7 move. That is something that I know I will be able to hang on to. So you've got to be able to find your spot, whatever it might be, because it's not just about finding the idea. If you cannot hang on to the trade, or if you cannot execute the trade when it comes to executing your plan, it's just never going to work. So knowing your personality matters. I'm going to give you another example here because this is one where if you are the type of trader, again, not like myself, where you are constantly holding trades, shotgunning, everything is an opportunity, everything is worth the big hold, then you don't have to be necessarily as patient for something like a Rivian play. Because if I'm thinking long bounce on Rivian, I need to find the exact right spot to get in by my style. So if I'm buying on the way down, like there's a lot of spots in here where maybe you could try to find a bottom, but there was never anything that gave a disciplined setup. The first opportunity did not come until 11:25. Rivian was probably the second biggest opportunity trading today, and if you weren't short, you wanted to have some kind of a bounce play long, you couldn't really do anything in my style until it got here. It defined a bottom, it held it, it then double bottomed it, and then that is my entry, where I know I can just get long in here with a really tight stop, and then the risk to reward works. If I'm going long all the way down in, I'm just going to be taking pot shot after pot shot, which could be okay. But ultimately, being a more risk-averse trader, you're almost waiting for that perfect setup. And if you see me in the live show, you'll notice I'm more often flat, I'm more likely to take profits early, I am more likely to be scanning for ideas at all times because I know I need to find that perfect setup with the tight risk to reward. On the other side of things, if you find yourself being an aggressive trader, here is what you have to be guarding against. There is no question about it. If you're an aggressive, every single trade is a home run, you need to be careful about your own bias. And I was talking to some traders about this in the morning. The aggressive, I'm holding for the moon, every idea is a monster trade, that type of trader is more prone to blow up if they end up being wrong. So if you have that style, watch out for trending stocks. Be careful, because the way I trade, if you're more conservative, looking for a curl on an AMD which is going parabolic isn't that hard of a thing to do, because I'm just going to stop it out really tight. Anytime I take a short, that's a short, tight stop, not holding against, no averaging in, tight stop, not holding against. So I'm shorting it multiple times and it's not costing anything. But if you are the other side where you think everyone is a huge win like that NVIDIA trade, well, you will find yourself, oh, I like the short, I like the short, I like the short, I like the short. And what will happen is you will be in your maximum position when you are wrong. That is a huge problem, because if there's one thing about trading that you have to adhere to, and it's just simple math. Your losing trades cannot be bigger than your winning trades. And the only way that that works out is if you have some kind of ridiculous 90% win rate. There are ways that that can work. If your algos can sometimes do that. There may be rare specific styles of trades where that works out to you, but it is just that simple. So if you find yourself as an overly aggressive trader, you need to be extra cautious of the trend and fighting the trend. Because what will happen is that stock that doesn't mean revert. If you're like, this is a short, this is a shorter, this is a long, this is a long, and it keeps going in the other direction, you're in trouble. Back in the day, I'll never forget this on my old trading floor with Sean. There were a couple of bank stocks where I promise you, if the office was making money long in this stock, and it was always BAC, if the office had done well in BAC longs for like a couple of weeks, if it had a down day, I would look at our P&L and I would look at our positions in the middle of the day, and every trader on the floor was trying to catch a bottom because they'd been making money on that long trade. And the difference was the guys that were the conservative style never had to worry because they were just in, out, taking small hits, waiting for their spots. But the bigger swingers out there, always had a 2 to 3x losing day relative to their winners when that good stock was trending against them. So you've got to guard against that. Are you a risk taker? Are you not? Find styles of trades and entries that fit those. And then remember, you can only accentuate your strength and try to diminish or try to control your weaknesses. You will not change who you are. My wife's tried. You will not change who you are. You will not change the trader that you are overnight. You're not a robot. But what you can do is understand how it's going to get you into trouble and how you can avoid those blow-up trades, because it's just that simple. That's the real deal. What style of trader are you, and how can you take it to your advantage?